Hi everyone, welcome back to Seven Figures. In today's episode, I'm going to be going through the dividend performance of this portfolio primarily. Usually I go through the growth, the dividend, and the Boglehead portfolios, but to try to keep this episode short and focused on one topic, we're going to just dive into the dividend portfolio in terms of its performance. The portfolio is now at $49,000 in totality. It's $2,000 less than it was 2 weeks ago. And that's primarily driven by the decline in the growth portfolio, which at one point had reached 300%. It's pulled back since then because of Tesla and other high-flying stocks kind of having a bad week or two here. Again, we're investing for the long term, so no big deal there. But want to be transparent and show that portfolios don't just go straight up in a line. You're going to have declines, you're going to have inclines, and it's all part of basically investing. And this is really going to emphasize even the importance of being balanced and not listening to people who say growth, growth, growth all the time, or people who just say dividend portfolio all the time. Probably the best place to really look at is like the Boglehead portfolio, where you're investing in the total market and you're taking advantage of both the ups and the downs. But without further ado, I'm going to dive into this, run you through the dividend portfolio, and I might take a few minutes to actually share the dividend payments that we've had over the past pretty much year and a half since I started this experiment. So let's head over there right now. Now here we are, dividend income portfolio. As you can see, we're currently up 37%, equating to $2,590. $460 of that has come from dividend payments that have been earned. And then the rest has actually come from market gains, the capital gains that I'll only realize once I sell my stocks. Right now it shows a cash balance of $22.83 here in a cash balance. Those are actually all dividends that have been paid over the last, I think like 2 weeks. So as you can see, we've been on a roller coaster with this portfolio. Those of you who've actually seen older videos, you know this portfolio was down something like 40% at one point in the last 6-7 months. And just hang in there, keep depositing money on a weekly basis. I think I put $50 in here every week. And sure enough, things start turning around and value is now a very important part of the market and gaining steam. As you can see, I'm going to take you down here to all my pies. As you can see here, the pies got some outstanding performances here, which is overweight on bonds. We got a little bit of overweight here on REITs. Just because I tweaked my pie a little bit, and I'm going even heavier on the financials and energy. If you've been following the channel, you probably know that I've been a big fan of financials. I've been a big fan of energy. In my own portfolio, I have a lot of Bank of America. I have something like 600 shares of Bank of America. I have probably another 400 shares of Wells Fargo in one of my other accounts. But big on financials. I've been raving about them for a long time. The banks are always doing well. They're doing great. Finally, people are realizing the economy is going to be okay, and those are growing. Energy, probably one of the easiest ones to pick off. At one point, oil was negative. That probably was a sign to start buying. And I did buy some energy stocks, and I was overweight energy the whole time. And now it's coming back in vogue and becoming a big player here. We have bonds, which are doing well. Consumer discretionary is just doing fine. But let's see who are the big gainers here. So I'm going to hit this gain returns and sort it out. So energy is sitting on top. That's mostly oil companies. If you talk to anybody probably 2 months ago, they would have told you you're crazy to invest in oil. And look at this, 62% up. Alternatives, this is mainly Algamol, so I don't really count this. This is just a lithium company, miner, so I don't really look at that much. Financials up 60%. Technology is still up 51%. Technology is still doing well, place that I believe in. Communications are up 49. Consumer discretionary is up 48, and I really upped this a little bit more now. I'm targeting 9% of my portfolio to be consumer discretionary. As we reopen the economy and people go back to work and go back to traveling and doing everything that they like to do, discretionary spending is going to go up even more. Industrial is up 40%. Healthcare is up 33%. Really not a big believer on this anymore. I think it's had its run. It's going to start, becoming flat. Staples are probably going to be flat for a while too. And I reduced my bonds to a target of 6% now because I feel like you're not getting paid there well enough to actually justify putting money in there. And then at the very bottom, The two things that I've seen a lot of people on YouTube love a lot, especially for dividends, is utilities and REITs. Never been a big believer of these. I thought they were overcrowded. Too many people were in here trying to get dividend payments, and I think that depresses a dividend, but also strips out any future performance. And I'm glad to see that theory playing out here. But overall, very pleased with this. It just kind of shows patience and continuing to actually accumulate assets at depreciated prices is the way to do it. We're now up 37%. Now, having said that, I'm going to take a minute here to kind of share some of the dividend payments that I've been receiving over time to kind of show the power of passive income. So let's head over to my spreadsheet to kind of show that. So here we are on the dividend payout tracking that I do for my dividends. This is kind of like demonstrates the power of passive income and being paid on a monthly basis from your dividend portfolio. So up here, I just have the payouts going from here. This whole line is just the payouts I'm getting every month. And then the growth of those payouts, because you do want to make sure you're seeing that there's some growth coming in a month over month. And then here's the average of my payouts, right? So if I average out my payouts, that average has been trending up, right, to about $18, $19 now, basically is my average payout. And I like to know what my average payout means, which is hopefully one day this is going to get to $100, $200, $300, but it keeps going up. It started off with 22 cents to $3. We jumped up to 8. We go up to 14, but it just goes up and down a lot. But overall, you want that trend to be going upward because you're getting more money without having to work for it. And then here's just a chart here to kind of show how that works. And you have a trend line in here. And as you can see, there's a lot of ups and downs in this chart. But at the end of the day, what I want to look at is a trend line. Is that trend line going up? And it is. It means my passive income from this portfolio is trending in the right direction, which is upward. And that's really the power of dividend investing. You are getting income on a monthly basis without having to work for it. So, it might seem like, well, if you get $18 or $19, that's not a big deal. But, well, getting $19 without me having to do any work, that's actually pretty important. And one day that could be $200 a month without me having to work for it. And it just keeps paying me and paying me and paying me. So I like this one. I'm going to keep tracking it over the next 5 years. So we're a year and a half down. So that tells me we're still, 3.5 years left of tracking this experiment. We'll see where this payout ends out. Anyway, that's it for today's episode. Really appreciate the new subscribers. If you like the content, please give it a thumbs up. Appreciate it. Have a good day. Bye.